Hello, hello, hello. Good morning. Welcome to another ES Future Trading stream. Today is Monday, May 8th. It is 8:55 a.m. The market is coming. It's going to start the week coming after uh, a week when we saw the market going from short covering to long liquidation back and forth a couple times. A really uncertain market conducted or where the dominant force was actually, or were actually the shortest time frame traders, which happens to be the weakest of all as well, because they don't have staying power in this market. There's no sticky money in that market, in those traders. We can see the volume was really low relative to the previous day, and even relative to the three previous days before that. It's a cautionary tale for what could happen after this day if the market keeps going higher. There's no volume back in the moment. However, the market is in short covering mode at this moment in time. Um, Momentum, once short covering starts, momentum can take the market long distances, and we don't know how long the market can go before the momentum to the downside, to the upside is over. The same thing that happens in the shortest time frames, in the daily, intraday time frames, also happen in the bigger time frames. I say this, I say that, just to use that to monitor the market. As usual, I start my day with a look to my bigger time frames, charts, which is also something I do every single day after the market closes. It is very important to get used to do this because it gives you an idea what the, what the other time frames are doing in the market. I am not the only one who trades the ES. We are not the only ones who trade the ES. There are another traders. Um, have to be aware, have to be conscious that other traders may have different time frames, right? These traders, the ones I am competing against, have may have monthly, weekly, or daily time frames. I trade my time frame is one of the shortest ones. I trade the intraday. I understand that if I compete against the biggest time frame traders, my odds of success are low, right? So I want to be in the side of the bigger time frame traders. Um, it doesn't mean that I am not, or I am going to disregard what the smaller time frame traders are doing. But what I do is I am I put context to price. I understand even the market is dominated by short-term traders. Uh, I have limited time in the market. If I have a winning trade, I know that I have to be sure to not overstay my welcome and not take profits fast, not trying to extend the trade too much because it can just turn on me very quickly. Okay, that's the reason why I take a look at these different time frames. So they actually give me an idea of what can be going on in the market. All right. That being said, I'm sorry about the if you hear some noise in the background, but I am doing my breakfast, preparing for the day. I should have done this early. And anyway, let's take a look. Let's take a look at the monthly time frame chart. By looking at the monthly time frame chart, we can see here that the market has a 2-month range here in a way. It's very quite obvious here, right? The market actually has a 14 trade range the last year, and a couple of months after that has been trading in a range. We have a range here. We have 1, 2, 3, 4 inside that range with the last 2 months being very having very short range. This is very short. Look at the other ones. Take a look at the other ones and pay attention to what the last month is. It's very short, very narrow range. Narrow ranges can be toppled easily. The market can be up here. I can trade to the opposite side right away. It doesn't have to travel long distances, and it can come down here. I can go to the opposite side very quick as well. And one of the trades, one of the popular trades is breakout and failure, right? If we have a breakout, we have two possibilities, two options up here when the market has a breakout of the previous range. In this case, I have a look to the upside, fail. It did not have continuation. What is the trade after this? The opposite side of this range. That range or that trade was very quick. This is a 1 month bar, and the trade was completed in less than a week. Or actually, yeah, it was completed in less than a week. The trade was completed in a week. Once the market reached the opposite side, the same trade in the opposite direction can happen. The, the trade can have downside continuation with targets this low, or can have breakout failure, look below and fail, which targets the opposite side. It almost trade. It was very close, right? But it was quite a move in a couple of days, more than half the distance, because this is a narrow range. Now notice how the high has no excess. No excess. We have 1, 2, 3 months, which highs are very close to each other. Guess what we have up here? Right? What do we have up here? Question yourself. Answer yourself. You know, you answer that question. What that can be that you have up there. Now the low has a strong rejection here, has a good selling tail or buying tail in this case. But notice how these lows are very close to each other. Look at the difference. Look at this. Almost the same tail as this one, almost same tail as this one here, but this is very different than this day. This is very close. These lows are very close. The current contract actually started here. No, I mean, but it has here. It was 1 month into the current contract. Um, the years and the market are still, kind of like in sync here. Yet that they still have one more here to complete this contract. Oh, actually, it's almost this one a lead and half of the other. And but compared with this one, as for example, very long tail here, you know, could be closer the potential for cracker effect here on this side of the market, but it's far away from this, almost 2 months from this buy. It's not the same as this. Very mechanical buying here. Very mechanical buying here. The lowest week of this range, of this short-term range, of this 2 month range, and the high is also weak on this range. You know? We can see that we have two matching highs up here and three highs all together. And notice how the market was bought from this level from where the market closed last week, 41.50, 41.40, I would call this, was sold multiple times Not once has been bought here. It was we have breakout of this range a couple times, one here, and this one as well. And the market is having a new buying level here around the 4200 mechanical as well. Mm? Which now let's take a look at the weekly. Now we see something here. We have four highs, four weekly highs that are very close to each other. We have a breakout of this range, 1, 2, 3, 4 weeks range, breakout to the upside, fail, market breaks, takes the opposite side, fails, and comes back inside, which gives which gave us a 5 week range here. We now have a 5 week range here. The longer the market stays in range, the more dynamic the break out of that range is. Okay. So the odds of this market is going to have a dynamic breakout are high. Whenever does that happen? We never know when it's going to happen. Nobody knows that. But the odds there's going to be a very dynamic break are actually high, very high. When that happens, um, we have a weekly level up here. The market is inside. We have a balance, kind of like a perfect balance here. The market had the chance to be an outside week. It wasn't. Had the chance to close below. It didn't. Right? It's not as weak as price make it look. But we have, yeah, obviously this looks more and more like a P. We have a P formation here. Uh, Sign of short covering in the weekly time frame. It's having some extension to the upside though. Now, let's take a look at the daily. What's happening in the daily? Okay, craziness, total craziness in the daily time frame. And the very uncertain market. We have a market that got too long here, long liquidation, short covering, long liquidation, short mechanical buying, very emotional selling, mechanical buying, emotional buying as well. Very weak low on the range. This low was weak. This low was weak. This low is weak. This low is also weak. It was bought. Look at this. We have a 25, 26 day range. Look where this low is. First, it has no excess. It matches this one. Second, it was bought from the 50 moving average. How much sign of weakness can I see here? Now, there's a lot of weakness on that low. It tells me who is doing the buy, mechanical buy. May we have seen that there is some mechanical kind of buying weekly, no, because those matching lows, low X's, long buying tails, the weekly, and the daily is starting to be more obvious here, right? We start to see some sign of weakness. Very weak market. And now notice how this day and this day and this day has no back and filling here. And then this day over here and this bar here and this bar here is just a continuation of this one. So there's nothing here holding this market. Nothing is preventing this market to come back all the way down to here, all the way down to 3,900. It's very weak. It was weak here. Some of the pressure was relieved. It gets weaker here. Was relieved the pressure again, and it's getting weaker again. Every time the market is getting weaker and weaker. It doesn't mean that the market is going to break, all right? Or it's going to break right away. That is one, trying to up from the movement is a common mistake that very, very open mistake that tends to be the doom of many traders. Right? I made that mistake many times. I saw a tremendous amount of weakness on the market, for example, and I say, oh, okay, the market is going to break. It's too weak. It cannot go high. It has to break. And I find myself short in the market. Well, um, just to see just to see the market, run me over, with big losses at the time. That's when those kind of experiences just teach you or taught me, along with my mentor Jim Danton, that that you know momentum is a very powerful force we deal with. We never know when momentum is going to end. The market can go long distance carried by weak weak or shortest time frame traders. One of the mm, mm, as I mean, I personally see this market, the whole market is carried on by Apple, I believe. That's my personal opinion. Um, just like IBM carried the market in the 70s. There's a couple of companies, especially IBM, carried the market in the 70s. Just like just the way the market that Apple is doing with the market now. There's tremendous amount of uncertainty here. The market, is in this range. Notice how the center of this range is the center of this range from that the market did back on at the beginning of the year, at the end of the first end of January, beginning of February. It's the same range. Market is in the same range. You have a gap in the upper side, gap in the lower side. The market had the chance to close this gap. It didn't. Yeah, but it was way too far back in time here to be of relevance. Now, there's way more weight on these two gaps than in these two. I'll give you more weight to these ones. Now, a general look before I go to market profile. Before we go to market profile, let's take a look to what is the other markets are doing. We have the bond market is trading in a range here. This is very, 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 very dangerous situation. The bond market is giving us here. This is short covering here, and you have a huge range in in the 10 and the 20. Yeah. Notice how the 10 has one, two, three, four highs, matching highs, and the matching highs are at the higher range. In the 30, we have four, maybe five, four highs, but are at the center. Notice how the the low of the 30 is one, two, three, four, five, you know, six, seven, maybe 10 today. Lows, very, 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 very dangerous, very, very weak situation here. If this market breaks, it can come all the way down to here, and I I think that maybe even take this one out. It got too short at this time. This is short cover, same in the 10 years as well. This is very very weak market, the bond market. From my point of view, I think it's being manipulated as well. Crude is starting to short cover, and it has a huge break here, coming from this long short covering here, long liquidation, and now it's doing the same. Very uncertain markets. Uncertainty everywhere you see. Even gold, you can see gold, for example, is hovering around the 2000. You also have multiple lows down here. Now look at these lows as well. Look at this low. If this market breaks, it can come all the way down to 1800. Notice also, when it's making the gold is making new highs. It's it's not unusual to see a market that make new highs to make multiple highs. Once one is made, that's not uncommon. Right? what gold has made. Now, I'm going to remove this and let's take a look at the market profiles. This is FOMC day, FOMC day. News broke the market. If you were present in the market, you will see you saw a lot of buying going on here at this level. Very mechanical day. The market telegraphed something give us a good chance when the market bought here. I don't remember what was here. I think it was sell X to the tick on previous day. It was a sign who was doing the market. The market came here, but they also the downside were big. But one of the things that we saw when this day happened, there was a huge amount of selling in this area. The market came back to this area like 7 to 8 times. Market took this once the level took when the market took the low, and this low out, the market came back several times. I count like 7 or 8. Um, Market breaking news is not unusual also that whatever the distance the market travels, it's not unusual to see the market recovering. In the following days, it did happen. It did happen with ES in this case after after FMC. Now a huge increase in volume here. Traders selling as crazy here. I got a wrong trade here. I was caught. I tried to short the market here. I got the direction of the market, uh, but I this was a red day to me. But I was aware. You got to be aware here that if you are down here, you know, the market is very short. Just very short. It could be the direction that the market wants to go to the downside, but maybe too early. That may have happened here. The market was too short. The next day, Friday, a very low volume. Market got too short, and short-term traders just took the market too high. On Friday, very low volume. Market was got again. From my point of view, it's too long. I am carrying this piece of information from Thursday. You know, 3 times was the market bought from this level here. So we got 1, 2, 3 here, which was the ES, well, very close to the monthly, weekly, daily low. That's why I still have this mark, but very mechanical way of buying. The same nuance that I have noticed up here is the same nuance that I noticed down here. Okay, the difference from entering into the current week, we don't have much. We don't have much. The big tech companies, big earnings have, all the big techs have reported earnings. We have CPI on Wednesday. Job statistics weekly, consumer sentiment. Not too much here. There's a lot of Fed speakers during the week. 1, 2, 3, 4. Um, Not major earnings as well. No. We may have Walt Disney, PayPal, but not relevant actually. We don't have Home Depot, Lowe's, Walmart, Target, Nordstrom, whatever the name of that company is. Um, no significant sources of volatility here. So the market may be focused on more on stocks this week. There is these banks that are getting, in the regional banks that are falling one at a time. That could be that's kind of like a crisis developing in slow motion. It could be. We never know when something is going to happen. We never know when one of these things can happen, and if caught the market too long or too short, that could be the spark. The catalyst that the market needs to break, either to break or to rally. Try to look the market in terms of inventory, rather to have an idea, to try to understand market dynamics. Otherwise, you will see just market going higher and lower. When the market is going to go low, when the market is going to go short, I mean, lower, higher. When we see in terms of inventory, it we can see better, right? If you don't have market profile charts, you can do it yourself as well. It's very useful. It's not it's not hard to do. That's something I do myself. I do myself. And I try to do it when when the market is is open. If not, I do after market close. It gives you an idea, right? Gives you market profiles is just a way to organize data, just that. So we can see data organized. It is technical, no, it's not it is a scientific tool to organize data, nothing else. I don't trade market profiles. I don't trade this high. I don't trade this low. I don't have setups. The market comes up here. I'm going to sell. I'm going to buy. I don't do that. What I try to do is to understand what the market is doing, how to understand the situation of the inventory, what kind of inventory. It's one thing the market coming all the way up here, for example, in a day like yesterday, with high volume, for example, right? But there is nothing going on in the that in news and maybe out in the world that can give me up a directional move. But when I see this kind of movement after a gigantic break here, there's a lot of shorts in this market. There's a lot of shorts in this market, and this upside movement is a consequence of that. It's just a liquidation or not a liquidation. It's shorts taking cover, getting cut short, being squeezed to the upside. Um, I th if you don't see context, you can see this market. Oh, this is a strong market, right? We are going to the moon now. But when you start to see the situation, okay, this could be just shorts getting covered. If there is no volume, for example, like yesterday, there's no volume, so the risk of being long could be higher here. Could be, right? But add another situation. What is the another layer here? Uh, we have seen in the weekly, daily, monthly, weekly time frame charts that this high is exposed, is very weak. We have a narrow range in the monthly time frame. Very narrow range in the monthly. It can be totally easy. Right now, we are at the center of the range again, a little, kind of like at the center. The potential destination of the trade is this upside. That's what the market is doing. It's coming up here. It's very emotional though. We have shorts, we have longs. Trade is got long here, being forced to liquidate, and trade is got short here, being forced to cover. Short squeeze, long squeeze here. There's nothing serious going on. But the structure overall is weak though, right? Very narrow range, very narrow range. This day has one of the widest profiles that I have seen in a while. Notice how the market was bought, where the market was bought. The 50 moving average, exactly the 50 moving average. We have a low very close down there, very close low here. All of the longs though from this day that were here have been out now. They are out on this market. Now, I guess I have too much data here. I don't need that. I have seen that. I just need the high and this low. And this is my weekly time frame charts. Um, I have this. I do take a screenshot that we use I'm as a wallpaper from the last week, the last 1, 2, 3, 4, 5 days. And I can see, for example, here when yesterday or Friday, when I have this short covering rally here, I was looking to the downside really. When the market didn't have volume, I was looking towards this trade, but to this trade to the value, I was aiming to this low here. Yeah. But first, the market has to give me the opportunity. It has to give me the opportunity, and that comes here. But when the market took this low here, there was, I don't remember what was here. Oh, it was a low of this range here, the upper distribution of this day. When this came out of this distribution, that was the potential trade to the downside, but it didn't have continuation. The market was to the upside. It just proceeded to squeeze the shorts even further up here. But I don't like on this day. Look at where the volume is. You know, these lows are not good. Volume at the center, yeah, kind of good. Potential firecracker effect. Volume, low the volume at the lower side of the histograms. This range could be the target. Destination, there's a lot of volume out here. This low has this low was taken. This low was taken. You know, when the market was here in this day, I don't remember. I guess whatever FOMC, it could target either this one or this one. What the market did is it could have been very well this one as well. Okay, it did this one. Now the next thing could be this thing. The market could be heading, but the thing is, as I say, the market could be too long now, right? It went from too short to too long, too fast. And notice how the volume, where the volume is here, triple lows here, a bunch of volume on the lower side, not in the upper side of the histograms here, and higher volume also in the lower side of this day. That's the information that I decided to carry on. The market is going to open in the upper distribution of this day. We have 1, 2, 3 multiple distributions are sign of emotional trading. They just get being squeezed, get caught short. Opening inside trading range, advertise chop. Chop is very costly. Also, when the closer the market opens to the center of the range, the higher the odds we have of having a rotational market. Got just a couple minutes to the opening. What I'm doing now, I am getting ready to monitor the open. And in the minute that's left, I'm going to get my cup of coffee. All right? I'll be back in just a moment. All right, market has opened. And where am I? All right. Hey, there you is. There it is. Okay. Let's see what the market does with this distribution. The market, these highs, these highs here, I recorded these highs with absolute lack of buying here. There was no buyers up here. Good access on the upper side. No buyers here. No buyers here. No buyers here when the market got to that highs, to those highs. These areas here are areas for me are areas of volume that I am monitoring. Uh, what I mean with that, if the market took or take those areas, these areas here, there's a good odds. There are some good odds the market can take. You know, there's a lot of volume you can see here, 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 here as well. A lot of volume here, but the market has to deal with current business first. Right? This could be. Oh, by the way, inventory from the overnight is is long. We can see settle here a good amount of inventory. We can see this movement going to the upside. Volume, very low volume in the overnight. There is less than 150 in the 12 periods from the overnight. Uh, Kind of like a mechanical buying here. Let's see what the market. I don't trade. There is some days that I can trade the opening when the market has the opportunity to do or to when the market is out of balance. Market is in balance to me right now. Uh, Balance too long, right? Which for me being long at this moment in time is risky. But there's a lot of activity going on here at the opening. What I am monitoring is, as I say, this higher volume. Oh, by the way, there was a huge amount of block trading at or after the closing on Friday, uh, which is this. This very unusual here. Huge blocks here. That's that. I mean, what I am monitoring. This has nothing to do. I don't trade those ones, but it could be a sign to me, right? When there is something on somebody that's interested there in not letting this market fall at that moment, right? At that moment, because if the market is going to break there, there's not going to have volume. The market is going to move too much, too fast. It is easier to have the directional move in the next day when the market is open, because the market has more volume. If I'm going to be a seller, for example, if there's no volume, you have big volume to sell. I'm going to I can move the market long distances, right? If we don't have that volume, but today we do have volume in the regular business, regular trading hours. So if I'm going to fill a position, it's going to be the market is not going to have that much of movement. All right, that low is not good. Being exactly at last low odds, so this low or high odds of market coming back to check this level out. I can see, for example, right now there's not too much selling. Right? Volume is lower today. These longs are very exposed from Friday. This is just, to me, it's short cover. It's short cover. But what happened in the daily, in the intraday time frame, happens also in all time frames, right? I can take this short here when the market took this low here, you know, because I can see this failing to reach the opposite side range. But if the trade doesn't have downside continuation, you know, I know from before entering the trade that my exit is the market re-enters this low, I'm out. All right, I'm out. I'm not going to wait and market rolls me over, so I can, I'm not going. I'm not going to cover up here. I got here. This is my exit. Yeah. And because I see the low volume here. Now this trade could have been early, right? But the same thing happened, right? If I in the bigger time frame, in the daily, I'm not going to short, for example. I am not going to short until I see something. What I mean with this, let me explain myself. This is just some. I don't trade futures straight. I trade options, which gives me more room. The market is going lower here. When are you going to go long here, for example? When are you going to go long? The market keeps going long. Why? Why are the trends to the downside? Why are you going to be long here? This is like a suicide, right? Uh, Now that the market ended the downside trend, okay, now I can do something here to the upside here because I have the bigger time frame doing its job to the opposite side. The market has reached now bigger time frame has reached the opposite side, has reached a trade. Now what is trade? What the potential destination of this trade? It could be the opposite side. But what do we have to do? We have any kind of movement, any kind of potential um, uh, catalytic? Nothing. There's nothing here. There could be a quiet day today. Market could get too long. Yeah. I want to see if the market is going to come out of this range that yesterday's or Friday's range. No, it has to be fast. For example, right? This downside movement could be very misleading. This could be just a short. This could be just liquidation, right, of the overnight short, very short time frame trade. Right? It's not serious selling. You know? But look at what this buying is happening or has happened. Can you see? Once is the level where the big blows are. Hmm. Okay. Second was bought from last. Exactly the tick. So still no big time frame trading here going on, or at least not going on at this moment. Uh, what happened here? What happened here is somebody realizing, okay, the inventory got too short. Boom. Let's just squeeze the shorts here. This is just what happened. Right? Well, the overnight low is, and the market's been bought. This is being it's using this reference, the 4140 we saw from the monthly. Hope you remember that. There's a lot of trading going on around this 4140, which is these highs, 1, 2, 3, 4, 5 times the market being bought. Not once, I mean, sold from that level, not once being bought from that. Now has been bought. There's some, not a monthly chart, a bar, right, in the monthly time frame chart. Okay, people usually comes and ask, do you trade or what are you going to do here? Are you going to say? Are you going to do? Hey, Tremel Alexander, you know, um, when I have when I have biases, could be very dangerous, right? Because it doesn't. This is my opinion. My opinion. Right? I may have. I try to be aware. Okay, it's going to be a down day. Wow. Okay, but really, can I see the future? For example, right? When I have in my mind It doesn't allow me to see what the market is doing because what is happening, I am I am expecting something. So I intend to position myself in one direction. Now, I know the market is going to rally. Okay, I want to wait for a break and to buy the market, right? And then I can get the trade, and the market goes against me. And because I am so biased, I don't cover, and the market, you know, suddenly when I realize I am deep underwater. So I try to be, I try to be I try to be as neutral as possible. Don't care how much information I have, how much the market generated information is telling me or pointing me in one direction or the other. I, I try to be as neutral as possible to see what the market is doing. Once I kind of identify what the market is doing, identify pressure, where the pressure is directed to, because I actually see the market to the upside. It is to the upside, it is weak. It is conducted by very short time trends, but that's the direction the market is doing. There's tremendous amount of weakness on the lower side, but I see the direction to the opposite side. The trend to the downside has ended. There's no more trend to the downside. That ended on Friday. There were 4 or 5 days the market went to the downside, and Friday, was the culmination of that. The first day that the market, end the trend to the downside. There is a tremendous amount of weakness on the lower side. Yeah, I agree. I agree with that. Right? But I'm not going to I'm not going to try to up from the market. The market can go long distances if it has momentum. Okay, momentum can do crazy things. Right? Many times, I have been right, but goddamn, I was just, you know, the market is weak, for example, right? It has to break. It doesn't have to. I learned that the hard way. Until I see something, right? After the crazy days, for example, that we have every single day. The last week was we have these crazy openings, very dynamic openings going to the upside, downside, upside, downside. And traders got used to that really fast. Now we are going to have the same thing again, right? We are used to that now. Another thing is patience. I try to have patience also to see until I see something. I don't like the way how this market is doing. So it has absolutely no tempo. No, the pace of the market is doing this. I can see the market trying to go to the downside, for example, right? But the pace, what's the pace? What's happening here? In the pre-market, I had I had this thing, because what happened on Friday. There could be a possibility the market could target me, maybe this POC from Friday, especially because of this low here. This could be the ultimate destination of the market uh, for the week, right? Um, but first, the market has to do some things. Right? There's weak buying here, for example. There's a weak buying here. Traders keep buying the dips here. Now, why? Why you buy the dip here? There's just I remember the ES as an index. It's an index. It's a of it's I don't use this volume. I use overall 90 New York Stock Exchange volume as a reference. Now this low is weak. I have the low of the upper distribution as a next reference, as my main reference in the short term, very short time frame trade here. Can the market take this last out? Can the market repairing this level? Can you see where the market has been bought here. 1, 2, 3, 4, 5, 6, 7, 8 times. 4 hours being bought from the high of this distribution. Can the market at least close one distribution here? If this distribution is closed, the target is this lower side. The market closes this, the destination, the potential destination is this one. If the market closes this destination, the potential destination is this low here. But to take the trade, from my point of view, I need to see something going on here. Notice how the volume is. We are almost a little bit more than half into the first period, and volume is less than half from previous day. So this volume is going to be even lower. All right. Okay, last has been taken. Notice how mechanical these buy-ins are. Market is stopping here. Market is stopping at last. It has to stop at POC. Next thing, closing the distribution, targets this low. Okay. A weak market doesn't stop 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 here. It doesn't stop here. It just goes through that, with ease. Next destination, the opposite side of the range. Let's see if the market can take the lower range. It has reached this range. Now it's re-enter this upper range. Re-enter in the range. Targets the opposite side. Very mechanical bio. Yeah? We were talking how low the odds were for last to be lasting low. This low has been repaired. Market took this low out, took this range. It couldn't take this range out. When you start seeing, as I say, it helps. It helps a lot. When we start seeing the markets in terms of inventory rather than just price, it helps a lot in our trading. This is a trade that has taken the whole weekend to develop. You know, when we got these weak highs here, this multiple distribution on Friday, market just find nothing here. You know, I couldn't take this high out. You couldn't get, you know, was get really close. But it took long. It took really a good amount of time to develop. You know, I guess this is the time to hedge or to start premium because this is a level. This is the level where the market can give you some problems. You know? Market got too short here and then got too long. Market has reached the destination of this trade. I reached the opposite side of this range. Right? My question is, can the market close this distribution and take this range out? It's the second time the market is re-entered this upper distribution. Now, one thing to observe here is notice how the overnight inventory, which was long, has been corrected now. Okay, so if there is something serious to the downside, here is where I want to see downside continuation because there is no supplies from longs now. All the longs from the overnight have very much been removed, have been forced out. Right? If there's some serious selling, here is when it starts. Here's when it starts to monitor because the good thing is down here. Right? Taking closing these distributions could target this low. That is monitored. As important as is to get into the trade, get in the direction of the market. Remember, I have a bias to the upside in the longer time frame. I consider the highs to be weak, but I don't see volume. I don't see bias. The higher the markets go, the lower the volumes it attracts. Right? So it just dies up there. The next thing is the monitor for continuation. I don't like, how the market is doing the selling here. It's stopping. Notice where it has stopped. Do you have this? To the tick. It has stopped right there at the low of this distribution. A weak market doesn't stop. A weak market just keeps going through here. This level has hot knife to the bottom. Even but it doesn't. It's not a good place for a long. For example, huh? It was very risky long here. Now, if the market comes back inside this range, it would be the third time in history, you know, which kind of gives me an indication what kind of selling, you know, what kind of selling is this? All right, my. Did the market re-enter the upper distribution? Also, why I care about the distributions, right? The distributions, I see distributions another days. Oh, what? Oops. How do I do this? I want to split the day here. Oh yeah, I was split already. This could be one distribution. J is another one, right? J, K could be the other one. Right? This is one day, another day, and another day. Multiple distributions in one day. A sign of emotional trading. Emotional buying in this case, right? Oops, how do I? The next level, the next thing to monitor the continuation is overnight low, follow. Notice how close the overnight low is to the high of this low, the lower distribution, which coincides with March high. There's huge amount of volume down here also, right? There's huge amount of volume down here. Notice how this rally from Friday has the higher volume is at the lower side, not at the upper side. It happened at the M period and J as well on the lower side. Below this low, all this inventory has been removed. Below we have more inventory here, and below that we have more inventory. Not on the upper side, but on the lower side. And what happened with the shorts when shorts are removed from the market? If you are going short here, how you get out of the market? You buy. But buying is one trader, one kind of trader getting out of the market. There's no new buying coming. So the movement to the upside doesn't have the strength. So the rally, what actually does is weakens the market. Now, why I'm long biased, right? Why am I biased to the upside? Why am I biased to the downside? It has to do with the time frame. You can have the right direction, but different time frame that I do. So that's why I don't call trades as well. I don't know what you don't know what my time frame is. I don't know what your time frame is. I don't know how long you plan to stay in the market, for example, but that's one thing. Notice, look at this, gosh, look at this, look how much is this? Maybe 10-20% lower? %20 lower than this day, that in turn was 17% lower than the previous day. You know, whatever the market is doing, I don't know what the market is doing. The market hasn't moved. If any, the market is in the upper side. We have one day here and another day here is to the upside, right? The market is in the upper side. Why I would go short here if I see the market going to the upside? The short time frame, the short time frame can also have multiple time frames. There are traders that are very short or are Jim Dalton is short time frame trader, but I am shorter than him. My time frame is shorter than him, and I understand there are other traders that are shorter than mine, have time frame shorter than mine. It's very important for each of one of us to understand what time frame, what kind of time frame we trade in, and understand also that we are not the only ones that are trading. There are multiple time frame traders that are doing their job at the same time. That's one of the reasons that you can argue. You can have two arguments. You can have two traders having two opposite views of the market, and both can be right. Now, the weakness that we saw when the market was breaking and being bought from mechanical levels, now the same thing is happening, but in the opposite direction. Notice where it's being sold from last, right? The market has re-entered the upper range. What's the destination trade when the market re-enters the upper range? There's a lot of trading going on here. The market is going trade is going short, trade is going long, trade is going short, trade is going long. There's a lot of, there's a lot of money being lost in this kind of markets, choppy markets. Look at that high. Look at where that high is. Now the first alert that I have, is volume. If the market breaks, it would be just long liquidation. It would be just a liquidation from very elongated market that we have on Friday. Very narrow range on Friday. Very narrow range. How thick is the thickest area of the market profile here? 1, 2, 3, 4, 5, 6, 7. It's a little bit wider than this one though. Mechanical selling here. Now, if I am long, if I'm short, well, come on. You can see where the market is being sold from here, right? Very mechanical selling. There's a high risk short. If I was short down up here somewhere, okay, the market has high odds of taking this one. Maybe taking back this, because the next reference, when the market repairs this high, is half back again and then opening. Very close, market is very close to this. The market give you this is the kind of markets, right? But we were talking in the morning is not that I trade the opening, right? That's one thing. I don't trade the opening, and the other thing is when we have this kind of openings inside previous day range, the closer to the center, the higher the odds of being a choppy market, having a rotational market as well. If a guy happen to have a winning trade, I don't expect home runs, any kind of home runs in this kind of markets. Don't overstay your welcome when we have high odds of having a rotational market. Rotational markets give us more opportunities, but shorter, fewer gains, short gains. That's the characteristic of rotational markets. Don't overstay your welcome. Make profits as soon as you can. Alright, it is 10:05, unless there's any questions out there, I guess I'm going to call it and call the morning. I wish you guys a good rest of the day. Stay safe out there. Have a wonderful day. And see you later. Dun, 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 dun. Dun, 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 dun.